Okay, so welcome to the IJCAI panel on AI in FinTech Challenges and the Future. So I'm Longbin Cao from University of Technology, Sydney. So why do we want to have this panel? So there could be millions of reasons actually. So as we know, so AI in finance, AI in economics, this has been a big topic. It has been there for over half century based on my literature review. So today, of course, with the new generation of AI and the new generation of data analytics, particularly data science, a fourth paradigm, and that actually substantially motivate and drive the new financial service and a new generation financial innovation as well. So that actually has dramatically influenced our daily life, society, and the economy as well. And you can see thousands of papers actually in the literature, about this topic, AI in economics or AI in finance or AI in FinTech. And I created this diagram after my reading of about 300 papers, those core papers. So this is four-dimensional diagrams. If you look at the bottom, actually, so I just listed almost all of the financial economic, assets, products, instruments, or service related to insurance broadly, wealth and surveillance, commodity, of course, the core ones like equity, commodity, derivatives, they all involve, AI and intelligent system, et cetera, et cetera. And we have bigger and bigger data from the financial and economic domain. So that has all the challenges, exciting things related to heterogeneity, related to complex interaction, related to hierarchy, related to distribution, related to imbalance or stylist, features, etc., right? From like accounting, from banking, from online, internet finance, etc. And then on the right, so almost all mathematics, statistics, and so-called machine learning and data mining or whatever, analytics techniques or optimization have been used in one way or another in match the data from the economic and financial domain. So that's actually create a huge paper sale, and so different purpose related to either mechanism, design, optimization, or forecasting, very common, or some other modern topic related to cross-market analysis and the stock representation, etc., etc. So this actually gives us a huge opportunity to talk about this topic. And I have a long review paper on AI in finance shared in SSIR about this, but just still very shallow. So we actually organized a special track on AI in FinTech this year with IJCAI20, and we have around 200 valid submissions, 35 accepted, and we have 3 sessions here, and today and tomorrow. So all the key topics related to lending, blockchain, related to banking, payment, portfolio, marketing, and regulation, risk management, etc., etc. So you invited the participants to attend those sessions if you have time. And today, why do we need another panel? And we thought about, there are many big questions to discuss and even debate. For example, so when we talk about the challenge, so what are the challenges in financial service or in the modern like internet finance that actually require better or new generation AI, and what AI-driven FinTech challenge the financial service, challenge our regulation, or challenge the end users, because we have all our data collected and used, and somehow we are bothered. So some other topic like so the financial service become more and more personalized and tailored for individuals, and that also causes a lot of like ethical issue, some other issues as well, right? And also further, so some from the regulator perspective, let me think, okay, the internet finance and the new generation AI-driven FinTech bring a lot of trouble to them and fundamentally challenge the conventional regulation and risk management systems. How would AI or the new generation AI solve such kind of problem and make AI-driven fintech safe, trustful, ethical, and also accountable as well, right? So I mean, a big topic is to discuss, and particularly we look at the future. So today we are so lucky to have four most distinguished panelists to join this panel and debate and share their inside view on the those big perspective. So we have Dr. Usama Fayyad from USA and Dr. Emmi Shi-Nash from UK and Professor Michael Wellman from USA and Professor Qiang from China. So amazingly, each of them has very broad, experience in both academic and the industry. Let me briefly introduce them alphabetically. So Usama, so he has all the top level, academic recognition, like a fellow of ACM, fellow of AAAI, and he is excitingly, he is inaugural executive director of the Institute for Experiential AI at Northeastern University. Something very exciting, and he has a concept there. And he is also the chairman and founder of Open Insight, and he was the global chief data officer of Barclays, and he was actually the world first chief data officer. That was 2004. Amazing. And the concept today, so overwhelmingly used, and people are proud of this, new concept, created at that time. And he has other experience with Microsoft and with GPL as well. And now he back to uni. So and Emmi, so Emmi has very comprehensive experience as well as a women leader in this area, and he is the global head of analytics and data science at HSBC UK, and he was the general chair of group data science at WeBank Australia, and he is a founding member and the chief. He was, I guess, a founding member and the chief data science officer at DataSpark FinTech spin up. And he is a member of Bank of England and Financial Conduct Authority's AI Public-Private Forum, and he is a founding member of the editorial board of Springer's Journal of AI and Ethics, and he's an advisor of the Initiative on Analytics and Data Science Standard, and he got the academic merit and also honorary doctor university. And Professor Michael Bellman, and of course, he has all the top level recognition of fellow of ACM, fellow of AAAI, and he is the division chair of the Department of Computer Science and Engineering at Michigan University and collegiate professor of CSE. And he is specialized and has decades of experience and leadership in the computational market mechanism and game theory reasoning method, with wide applications, and a company as chief of market technologies, spin-off company, I guess, the trading dynamics, working and applied his several techniques in e-commerce, finance, and cybersecurity. And he was a chair of Seeger e-commerce and also was an executive director of Journal of AI Research. Finally, we have Professor Qiang, and he got so many top level recognitions, fellow of AAAI, ACM, IEEE, and AAAS. And he is the chief AI officer, a big name of WeBank. And he is a chair professor of computer science and engineering department, Hong Kong University of Science and Technology. And he is the current chair this year of AAAI, and he was chair of many other conference, of course. And he's the president of Hong Kong Society of AI and Robotics, president of Investment Technology League, and former president of IJCAI. And he founded two now very prestigious journals, IEEE Transaction on Big Data, ACM Transaction on Intelligent System and Technology, specialized particularly in the transfer learning and federal learning. He has two books there, if you are interested in that. So with that, I'd like to invite each of the panel to make their opening statement on your bigger perspective and your vision about the challenge and particularly the future and how AI, next generation AI in FinTech could tackle that, make the AI-driven FinTech more safer and accountable and personalized, or whatever you think. Now, so can I go to Usama? So I just stop my sharing.
As Longbing mentioned in his introduction, I'm chairman of Open Insights, and I joined recently Northeastern University to head up the Institute for Experiential AI. My contact info is here, and I will go through some of these slides quickly, but I will also share them publicly, so you'll have them. Basically, digital transformation has changed a lot, and I don't need to dwell on that. A great dramatic example if you think of an accountant of the past, maybe 60 years ago versus an accountant today, what they do, what the nature of the job is, etc., are completely different. They have nothing to do with each other. Incidentally, I always say when I show this slide that there are a lot more accountants today than there were 60 years ago. So it's not about replacing jobs. It's about really transforming and creating new focuses. So you no longer have to have a good handwriting and an ability to add up in your head and flip pages. You now can actually focus on the strategic value to a business. What was lost in that digital transformation, and why I'm talking about it, is kind of I usually call it that digital transformation leads to blindness. So companies and organizations focus on digitizing the workflow, yet they forget that the human workflow was actually had its benefits. It had a way to give you feedback. Are customers happy? Why are they leaving? If they're leaving, what's their problem? What are they trying to achieve? How is the market evolving? That kind of goes away and leaves you blind, which is what brings in data and AI in a big way in this. Basically, if you think about a typical bank today, classical bank, I use the example of a Kelly making a deposit, has a good standing with the bank. That's usually the end of the story. However, the bank actually, and there's no excuses for not knowing this, knows a lot more that's relevant to Kelly. They do know that Kelly has a student debt. They do know that Kelly just got married. They actually know that Kelly is saving to buy a house, which means something that is good for the bank, good for Kelly, good for everyone, is to understand that intent and offer the right offering that are interesting instead of kind of generic offerings, just as a simple example here, and we'll go into much deeper things. So AI and FinTech, why? Well, the front office needs to inject human intelligence and understanding in kind of the customer interactions. And getting to understand intent, challenges, and issues, getting to reduce costs of service operations through chatbots that work, and most of them don't, by the way. Things like next best offer, next best action, reactivation, cross-sell, upsell, etc., all need an intelligence sitting on top of that digital interface. The back office, by the way, similarly needs serious help, whether it's compliance. I don't know if you know this, but for example, compliance and financial crime, most leaks, most issues happen due to a internal bad actor versus kind of an external hack attack. So a lot of this kind of monitoring and understanding and guarding and intervening cannot possibly be done just by humans watching. And that's why technology becomes a big deal in kind of adding trust in the operations. And then going beyond the human servicing capabilities, right? Some things humans just cannot do, right? A great example I like is several companies have offered, in collaboration with insurance companies, for example, you download a step counter and the steps kind of give you a discount, or you download an app and the tracking of your driving gives you a discount on insurance. Those kind of relating behaviors to cost and charges is a very big deal. Same with leveraging networks, social and otherwise, to embed financial transactions. Kind of a refactoring of how we think of financial services. How do you break it down to its components and you kind of rebuild it so that it fits in with the economy, with transactions, with servicing, with tracking, embedding new payment mechanisms, micropayments to a typical bank are extremely challenging, extremely expensive. To some new fintech companies, that's how they make their business, right? Through kind of these innovative ways to do payments, innovative ways to do finance, and embed it in people's life. Financial advisory has been an area that has seen a lot of benefits from AI, actually, where it actually worked. I was personally involved in one large project with one of the largest fund companies in the US, where you reduce the time you need to talk to your financial advisor at the beginning of each year, let's say, from 20 minutes to 5 minutes through a lot of self-serve and intelligence chatbot. That is good for the customer because they don't like that, session where they're being asked a lot of questions. They'd like to get it out of the way quickly. And then leveraging that understanding of all the instruments, all what's available, and matching it up against, a company like Fidelity may have several thousand to maybe 10,000 funds to offer you. Which ones to pick, and how do you pick them, and what makes sense for you and your goals, and all of that. And of course, modeling risk and future scenarios better suited for algorithms than humans typically, because the algorithms can account for a lot more information that are very difficult to account for. Finally, fintech. Why is AI necessary? Well, scale is a must, because we have gone digital and we're going on these channels for scale. Which basically says, look, algorithmic approaches are the only ways to go. And the new capabilities actually require this to enable it, because just taking a human solution to it isn't enough. Big challenges: fairness and bias of algorithms is a huge area. I'm sure we'll talk about it. And the successful AI is heavily dependent on machine learning and on data. And that's the area of big challenge, which is for most organizations, how do I get that data, and how do I get that labeled data for training, which is the most expensive part typically of a machine learning projects, and hence enabling AI. How do I get that right, and how do I get it going? That is overwhelming for most companies because the volume of data generated from digital channels are much larger. And also data is unstructured. 90% of the data in the world is unstructured, yet most organizations can only deal with structured data. So those are big challenges that are at the basics, kind of table stakes that we need to worry about. I'll conclude with, the typical challenge is, can you actually see the big picture? Do you have enough of those data pieces together to understand what the customer is about, to understand what the product is about, and how it's performing? And this is where it all comes together. I think it's a great fusion of data science, machine learning, and AI to kind of enable fintech to work. So with that, I conclude, and back to you, Longbing.
Thank you very much, Osama. Very comprehensive and thoughtful opening statement. So can I invite Emmi to make your opening statement?
Yeah. Hi, Longbing. Thank you for the introduction. And it was great to be here in the conference. I'm almost going to echo what Usama said, because these are a few things that really resonate. So from the opportunity perspective, I think there is no surprise that the biggest acceleration in banking, and in fact in any industry in 2020, is about the digital transformation. So, and the AI play a really fundamental role in that transformation. So from the, Usama mentioned the customer experience, from the recognizing, facial recognition to get to the KYC, the document verification, customer kind of a contact center transformation, and then to a full kind of scale mortgage. Now you could do it on a digital channel, and through that process that involved lots of modeling, the back office kind of a process optimization, the automation to reduce time to decision and the time to cash. So and in addition to this customer experience, we also see machine learning obviously play a very big role in terms of the credit decisions. So, whether they're credit cards or lending or SME kind of financing, trade, pricing, underwriting. So all of these are, has a big, machine learning really changed the way how that can be done. during the pandemics, I think there's an interesting thing to see what's the alternative data now can be used, because the usual transactions is not happening. The supply chain has changed. There's a lot of income pattern also changed. When you look at the SMEs, they're very different, and the government and offering new products, and so the whole pattern, and also the kind of a bottom-up learning approach has its own challenges. So I think I've seen, really interesting alternative data, and also the combination of some of the top-down approach or simulation approach used in this, risk space. And if we look at the pandemics, also really creating a lot of new challenges in the risk space, fraudulence, there's new scams, and the cyber stuff, and lots of files, leaked files, and the sanction lists. So these are all new challenges in the risk space, where AI really has that power to enable us to really tackle that. Moving on to sort of where I see really significant kind of a development. By the way, actually the barriers, if I just mentioned the barriers in adopting AI, is not so much about the methodology or stuff, lots of basic things like, legacy systems, the access to data itself, access to good quality data is challenging, and time to production, that pipeline, and also combined teams. Those are really fundamental, to the enterprise level. So I can see those barriers are I think the more investment into the data science workbench and stuff has reduced the time to production, but on the whole, at the enterprise level, that is still a big barrier for the AI adoption. Moving on to that point about the AI regulation, so definitely there's a huge amount of development in, since 2019, all the regulators and starting to publish their principles, and the open dialogues and starting to happen. So the implementation of some of the concepts, such as the fairness and the bias, and the how do you explain the model, there are really good kind of a developments I've seen from the academics and from the the solutions now starting to be more embedded into those AI platform. So I think there's a really good important time we need to think about how to tackle this, as a really regulated industry. So we need to stay ahead. And also there are lots of myths in the public, say the AI literacy, I see, and also building that trust, and public trust in AI is going to be really fundamental in where we are today. So that's my 5 minutes, and back to you, Longbing.
Thank you very much, Emmi, and you bring your unique perspective and very comprehensive as well from your banking experience, as well as you leading data science practitioners as well. So thank you very much. So can I invite you, Michael, to make your statement here?
Hello, everybody. Greetings from Ann Arbor, Michigan. I'm Michael Wellman from the University of Michigan Computer Science and Engineering Division. And I lead the Strategic Reasoning Group, part of the AI Lab in Michigan CSE. My research lately, my general area is multi-agent systems and econ CS. And a lot of my work has been over the years, in recent years anyway, in finance. And I'm often asked, why would an AI researcher focus in the finance area, which I think really is another way to take the gist of the questions for this panel. Just another side of the coin. And of course, the financial sector is a major economic sector. And so anything that's of economic significance is a subject of AI automation, and something that we should study. But of course, so is healthcare and transportation or construction. What is really special about finance that makes it different and interesting from the AI science perspective? And to me, one of the things that is really intellectually exciting about and also important about the financial system is to note that it's a very fragile system. It's basically built out of information. The financial system is all about who believes what things will be valuable in the future. Where are they placing their bets? What are they investing resources in that will be returned in the future? And of course, those are not really right or wrong independently. They depend on what everyone else thinks and what everyone else is going to be investing in and expecting to be true in the future. That's really, from a computer scientist perspective, you're really fascinating. And this, of course, if you remember the 2008 financial crisis, seems like a long time ago, but most of us still remember, that really showed the fragility of the system and the fact that when things break down, the consequences are enormous. We lost trillions of dollars of value in the world, despite the fact that there was no natural disaster, there was no pandemic. We didn't forget how to do things, just the miscoordination caused that. So we have this very fragile system, and it's already got lots of AI in it. We actually heard some of that from Usama and Emmi, focusing on financial services and why it's such a compelling domain for bringing in what AI can do to make financial services more effective and more efficient. An area that I look at and focus on in much of my work, not all of my work, is financial markets. That's also an area where the algorithms have really taken over in the last 15 years or so. Why is that? Well, there's several reasons. One is, of course, they have a very nice interfaces for AI agents. In fact, this might be the algorithmic trading in financial markets is probably the first place where autonomous agents have really taken over. Nice interfaces. There's a lot. You don't have to be like unlike a chatbot. You don't have to know natural language, and you can do a lot of things without it. There's a lot of data, volume, and velocity. And algorithms are really good at processing lots of data at high velocity compared to people. And they can do it fast. They can respond to information changes very quickly, much faster than people can. And so there's an advantage. And in financial markets as a domain where having a small advantage can be a big deal. And of course, if you succeed, you make a lot of money. That's all. That's all those things put together is why algorithms have succeeded in taking over financial trading to a large degree, despite the fact that you'd think that at a high stakes area might not be the first place to get so automated. I mentioned financial services. There's also a lot of AI decision making in issuing credit, many other areas. Looking at financial markets, I've already mentioned that the speed and precision far faster than humans is what has really led to that development. Well, we need to ask the question, okay, you replace human trading with algorithmic trading. What does that do to the financial system, to the stability of financial markets, the effectiveness of financial markets? Why might they be different? Well, when things have subhuman reaction time scale, that can really change the dynamics of behavior. We can implement all kinds of strategies that were not possible, that coordinate over things that are happening in many markets at the same time. There's new kinds of strategies like latency arbitrage or very short-term predictive strategies, anticipatory strategies that could not be done by, implemented by humans that now exist. Maybe new manipulations that people try to manipulate markets all the time, and there's maybe new things that algorithms can do that we need to be concerned about. It's all autonomous. There's not necessarily people in the loop. In fact, for the high frequency stuff, there cannot be people in the loop. It's based on learned models, which we may not really know why they're doing what they're doing. And we can do things at scale. So if you have a new idea about trading in financial markets, you can implement that not just on the New York Stock Exchange, but also in Tokyo and London and everywhere in the world all at the same time, and not just for equities, but for fixed income and foreign exchange and everything else. So the AI science question is, how can we model and understand that? And I'm not going to go into this, but my group has had a research agenda to try to really understand what are the implications of AI on financial markets and the financial system. it's not just, is it good or bad? It's what kinds of tactics are helpful and which are harmful in what circumstances, and how could we design markets to work better with AI? Our approach, which is to combine agent-based simulation with game theoretic modeling, and we've worked in a lot of different domains. And since I'm at the end of my time, I think I'll stop the opening remarks here and look forward to more Q&A later. Thank you.
Thank you very much. Yeah, so can I have invited Qiang? Yeah, please.
Yes, hello, everyone. Very well said, the previous three speakers. As for myself, I've been a professor all my life until the last 3 years. When I embedded myself in a internet bank in China. This is a purely digital bank. So let me answer Longbing's questions via my own experience working in the bank. Perhaps that can give you a different perspective. So to start with, this bank is 5 years old. It has so far no physical branch. It's entirely digital, working on the internet. Now the customer base is 270 million users in China. Individual users are using the bank service through their mobile phone and internet. And about over 2 million small and micro businesses are using the bank as various financial services. And so one position I found a digital and intelligent bank can play is to connect the services with the customers. And it does a really important job in this connection. And in this, we can see a lot of AI applications. I summarize them into 4 areas, into AI and big data, AI and services, AI and marketing, and AI and asset management. And in fact, I have a team of about 200 researchers, mostly from AI, and I broke them down into these four teams. So let me give you a few examples of how they work. So first of all, AI and big data. In this area, we practice and lead in the area of federated machine learning, and we have successfully built an ecosystem. So tell you the details about this. Well, federated machine learning is to aim to solve the data silos problem. As we know, if we build a digital bank, we have many models. For example, we want to build a model for loan approval, for risk management, for marketing, for asset management. All these require not just a few data sources, but hundreds, maybe thousands of data sources. And oftentimes, these data sources are not owned by the bank, nor are they owned by a single entity. They are owned by many different entities. And as such, it poses a serious challenge. The first challenge is privacy. As we know, if they roughly, they just pass data to each other, then user privacy cannot be protected. And this is in violation of many laws, including Europe's GDPR. In China, there are many similar laws on data privacy. The second is interest of these data owners. They are not willing to pass data to each other because data in banking especially and in many other businesses represent their core values. So they do not want to easily pass that to each other. And yet there's a need for them to work together. So federated learning pull these data sources together and enable them to work under a privacy protection model. By encrypting the local models, exchanging encrypted parameters, and let the model grow in a distributed manner. So when the model is being used in inference time, it's also used in a privacy-preserving manner. So many researchers are probably familiar with differential privacy. So differential privacy is an approximate way to make this happen, but it's by no means the only way. So To this end, we have built a platform which is now being used by hundreds of entities, including banks and otherwise. And we donated this platform to Linux Foundation, and now it has more than 2,000 stars, and many people around the world contribute to this platform. And so far we have seen applications, especially cross-disciplinary applications in banking and regulation, anti-money laundering, for example, in between internet businesses and insurance businesses, internet services and e-commerce and banking, and internet and retail. And so there are many examples that cross the boundaries of enterprises. Okay, we have also built an ecosystem in which we built an international standard for people to communicate, and this is the IEEE standard, the first such standard in federated learning. The second area is to apply AI to services, and these services are in banking are known as KYC, know your customer. So in this, on the AI side, we have natural language processing, speech processing, and visual processing. And then on the application side, we have many applications that are related to KYC. So let me go through them one by one. So for example, when the customer enters the service, they first have to be determined that the customer is the same person or the same entities with the ID. And so there is the comparison, and this is known as the OCR or face recognition or speech recognition or voice recognition. So lots of recognitions. And the task is very complex because from a real photo, the photo may be a mobile phone real-time photo, which can be in the taxi, which can be in the room, which can be many shadows or lots of noise. And you have to sift through hundreds of millions of photos to identify one that coincides with this one. Okay, so there's also the liveness detection, the OCR, and so on. So all these services require that we have really good AI services, such as the conversation engine. As we know, the smart speakers, such as Siri and so on, are general purpose. And here we have to endow the system with lots of financial knowledge. So there's a huge knowledge base behind. And one other thing is from regulator point of view, all the services are monitored and analysis being done in real time. One thing is to see if the customer service persons or robots are serving the customer to their satisfaction, and a mark will be given in real time, and this is known as intelligent quality analysis. So this is happening on the side, and the same analysis can be used for tutorial purposes. So one of the things is in this pandemic, many small businesses are meeting very severe financial challenges, and so they have need to pass on to the next stage to borrow some quick money. So as a bank, we have to make sure that they are credible in order to lend them money. So there's this interplay between the lender and the borrower. And so this risk management is really critical because it has to happen within hours, not within weeks. So to this end, we built a very fast service which involves a lot of AI to ascertain that this business is credible by using robots, by using remote conversations, analysis of assets, and so on, lots of data analysis. A third area is in marketing, is to find customers, new customers, is to find services to satisfy customers. So this is very much like recommendation in Netflix or in Amazon. But the product we sell here is financial products. As such, we not only care about customer arrive at the landing page and click on the link. We also care about whether the customer can be eventually converted. So this requires analysis of the leads, the application that's facing the customer, and the credit analysis. So it's further down, it's deeper than the traditional internet advertising. And we also apply federated learning here so that the two sides do not have to exchange real data, and yet they can work by a common, a powerful model. And so here we can see the back loan rate is driven down, whereas the marketing size is driven up. And finally, the last application I want to highlight is AI can be used for asset management and intelligent investment. So here are some examples from low-flying satellites, where we can see on the upper left corner, we can see a parking lot. And AI visual analytic can analyze the number of cars and therefore can infer whether a factory is fully operational. On the lower left, you can see some oil tanks, and by analyzing the shapes of the tank and the shadows, you can estimate very accurately the amount of gas that's stored here, and therefore give a good view of the macroeconomic situation. And there are many other situations, such as the upper right. You can see the flooded area when a major river in China floods in the summer. And you can analyze and estimate the severity of the insurance policy repayment even before the claims arrive. So there are many such applications that rely on AI and new technologies such as alternative data. And you can provide the so-called ESG, environment, society, and governance, which give a sustainability rate. So for example, we can use low-flying satellite images to monitor pollution. So the lower photos can give you the images of the pollution happening, and therefore the long-term well-being of the enterprises. And so to answer Longbing's questions, I think AI is increasingly playing an important role in financial services. And in fact, for the first time, we have an opportunity to build an entirely AI-powered banking service, including modeling, risk modeling, including the front end for KYC, including the marketing services, and including intelligent investment services. Thank you. Now back to you, Longbing.
Thank you very much, Qiang. I think that actually bring really exciting, the probably best practice, in the bank, and go beyond the banking to asset and to many other area. And I'd like to invite, questions from the participants. You can either, ask by unmute yourself, or you can, type your questions through chat or the QA as you want. And, please feel free to share your questions, and so we can discuss, and the panelists can maybe, better address those questions and share their view. And so what I like to, I'd like to first of all give a very brief summary of. I think the panels already address very broad areas from the traditional market to banking and to regulation, those and the marketing, those big topics which have been discussed over a decade, as well as the new opportunities, innovations related to internet finance, particularly related to asset management, wealth management, and mobile payment, or internet payment, as well as the combination or integration of the modern AI-enabled financial service and products, and service and assistance to more individualized market, to the individuals and people. So those are exciting. So we wait for some panelists, participants to pose the questions. So I have some questions for the panel members to discuss if you like. So look at the traditional market, theory. So there are some three big things we usually talk about, related to regulation, compliance, that's fairness, efficiency, and transparency, right? So related to stock market or derivative market, typically we highlight, these three big things related to operation, related to regulation, related to service, and that's the whole life life cycle would need that. So in a new generation fintech, particularly related to individualized, financial service products and innovations, how can we better, support and transparent and fair and efficient, individualized and personalized, service?
Yeah, I mean, I can start. This is Usama. I don't know whether you want to share screen or not, but I mean, my quick comments here are, there's two fronts, right? One is sort of the acceleration and speed that comes with digitization and doing things algorithmically. So that's one category, and I would call that kind of accelerating existing financial concepts. The other one is there's a whole host of completely new things, right? I mean, Qiang talked about a fully digital bank without any physical presence anywhere, right? And how do you enable and doing a mortgage in hours, right? Which is or a business loan in hours, which is typically unheard of. That is all about kind of forgetting about the macro and thinking about the micro and figuring out, how do we take all the little things that are done in finance, and if we decompose them, how do they fit in? When you exchange a contract from company to company, when you are getting a signature, when you are interacting with a customer, when during say a search session, or during their shopping, or that completely redefines how this finance and its relevance, how it applies to the context. And I think that's where the big change will happen. Now, the questions you bring up are very important, which is, how do you achieve things like transparency, understandability? How do you achieve things like fairness? And who even certifies whether something is fair or is biased? My biggest complaint against algorithms is algorithms are unfortunately very stupid and extremely data sensitive. If the data is garbage, the results are garbage. And the algorithms have no clue that the results are garbage. And that is where we kind of need a lot of attention, a lot of work to think through some of these issues and what they mean. Because as we all know, the decisions, if you rely on a machine, can be disastrous to certain businesses or individuals if they take the wrong direction. And if we're doing them at scale and they're happening very quickly, it's very difficult to recover from these without an intervention. So thinking through, where does human intervention come in? Where does judgment and common sense come in? And how do we compensate for the lack of judgment and common sense with algorithms are still a big area. And this is why we call the institute the Experiential AI Institute, which stands for AI with a human in the loop, because we think figuring out how the human in the loop fits in is a key here.
Thank you, Osama. So any other panelists you'd like to share your view?
Please, Emmi.
Sorry, just add a very quick one. I think the control of the process, the objective to, thinking about what the audience you're trying to target and how to measure those things might go wrong in the first instance is something, we don't usually have that kind of a practice. If we look at the current model development and the developers, we just look at how good the model is. So that's one of the, of the awareness of the culture change is to have a process that in place that also support those ethical considerations and putting them into the template. So people can actually thinking about it in the first instance. And, in our situation, because we got, a fair amount of model governance structures are already in place. And this is one of the things where you put in those like a conduct kind of reviews type of thing, but understand the objective at the very beginning and having the people on the ground have a way of thinking through those, I think is really important to bring those human judgments in this whole process.
Thank you very much. So by the way, audience, please, if you post a question, we still have a little bit of time, please, Qiang. Yeah.
Yeah, so I think Usama and Emmi are both right. Human decision in this digital age still play a very important role in the sense that we can use all the technology there is in AI to help us make decisions, but the top objective have to be set by human users, by the decision makers. They are humans. So for example, if you do not have the fairness in mind in doing this marketing, then you only aim for the rich and the famous. Then there's a long tail population will be forgotten. If you don't build that into your objective, then you don't serve the majority of the needed, and therefore AI cannot be said to be fair and transparent. So I think human decision is still very critical even in the AI age.
Thank you very much. So the second question I want to bring to you guys for discussing that. So the current new, particularly the internet finance, is more decentralized, is more distributed, and more federated, and more individualized. And I think this probably challenged the conventional theory and the system for regulation, risk management, and probably also challenge some of those regulation bodies or even some of the government. So how could AI and the next generation AI or next generation AI enabled finance or FinTech make them feel comfortable or more comfortable to accept, the innovation here?
So maybe I can take this first. In my work, I constantly have chances to meet with the regulators. They are at different levels. They are at the city level. They can be at the national level. They are very powerful, and yet they need a lot of update on the current technology. And I can fully understand their concern about safety and also fairness for people, ethical AI applications. So I think a more frequent communication is important, and also it's in our power to build AI tools to help regulators for them to apply these tools in order for the entire process to speed up. For example, we can build monitoring tools using speech recognition, using computer vision. We can use the decision-making tools, such as using deep learning or logistic regression, to help arrive at a decision or prediction for the well-being of a AI system. So many of these things we can think of for the regulators. Really, we are on the same side.
Thank you, Qiang. So anyone want to add anything? Michael, please.
Just one thing I would add about regulation is that, and when AI is in the picture, often there's a mismatch because we have laws and regulations that were built for a world in which people were making decisions, and we may be applying it to a world where at least in part machines are making decisions. And sometimes it doesn't quite fit because a lot of the law, say around behavior in markets or fraudulent activity, comes down to why was a certain decision made, or in lending, why was a loan approved or not? Well, when it's a person, you might have certain tools to try to find out why they did it, and you can ask them and so on. You may or may not believe them. You can't necessarily ask an algorithm. On the other hand, you can look at the code, and maybe that even tells you more in some situations than in other places. So I think we have to really rethink. Unfortunately, technology moves faster than the legal system and policy does. but I think we need to try to catch up.
Yeah, I think, look, and by the way, I actually think that regulation should always lag technology, because if you do the regulation ahead, you get yourself in trouble. But what I want to point out is there is a pragmatic way, a pragmatic framework to think about this, because anytime you make a decision, let's say you're an algorithm and you're deciding good versus bad, there's a zone where you're pretty confident about a decision, whether it's good or bad. And then there's that zone in the middle. And I think this is an open, where you're unsure, right? There's some level of uncertainty. And this is where we can kind of merge scale with human intervention, right? That's the zone where if an algorithm is not sure enough, it has to somehow very naturally and very efficiently kick into a human who can exercise judgment quickly or intervene or pass it through. And that's a great way to collect data so that you can actually produce better learning algorithms and better cycles. That whole area of kind of reasoning about decisions hasn't been studied enough, and that whole area about explainability and fairness metrics has not been studied enough. And I think it's critical for AI. If we do not address it, it will hit us as another big blocker, and will deal with many, many bad stories in the future. As we already
thank you very much. Yeah, thank you very much, Osama. So I really hope we could have another 1 hour, but unfortunately we run so quickly and we have another session to start. So I'm sorry we have to stop here. And thank you very much, all the panelists, particularly some of you in the later evening. Thank you for your insight. Thank you for your knowledge. Thank you for your leadership and experience. And thank you for your friendship and supporting this one. And take care. All the best. Thank you.
Thank you. Thank you.
Thank you very much. Thank you. Please enjoy other sessions. Thank you. Bye.